The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the March 25th, wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific Tuesday. Let's make sure that you and I, that we do everything we can to have an extraordinary, wonderful Wednesday. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. When we recognize that life happens for us, it means that you and I, we can find the gift in every set of circumstance that life is going to throw at us. And that is so important in order to be able to be successful out there. Now, here's the most important thing, though. The most important thing of the day is for each of you to know that I am grateful for your presence here. I'm absolutely here to serve you, so feel free to call in at 877-927-6648. Internationally, you can dial on in at 727-445-1044. That way I can assist you. Maybe you can assist me. I'm looking for co-hosts out there. Of course, this is Wonderful Wednesday, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures. They are flat, trading at 17,948. S&P futures up a couple of points, trading at 2,087. NASDAQ futures up 8 points, trading at 44.37. King dollar back 611 ticks as we speak, trading at around 96.83. You've got gold up $6 at 11.97. Silver up 11 pennies at $17 and change out there. You got light sweet crude up 28 cents, trading at 47.80. A quick peek across the globe out here. We'll see over in Europe, they got the DAX is off. Where is it? DAX. It's off 60 points right now. Really no big deal compared to yesterday. If we take a look at yesterday's move here inside of the DAX, had a pretty decent day out here. An inside day really today. You know, this is just simply consolidating up at the highs after making a 1 to 1.618 A to B equals CD to the upside out here. DAX just continuing its move. Of course, it's already hit its consolidation target of 11,708, but the DAX wants higher price. That is what's going on there. Inside the FTSE, down 4 points, really no big deal out here. The FTSE well above. Yesterday we noted that in the FTSE, I think is on this chart here. Let me switch over just to the different page out here. Yeah, inside the FTSE now, the key level to be watching is going to be 69.50.60. That is its all-time high. That takes you back into what the 1999 was it? When does it take us back to? Let me go back there. I should probably write that down, then I would remember. I would be able to. I wouldn't have to do this. I could easily do it. There we go. So it takes us back into 2007. No, that's not 2007. That's the high that I'm looking for. It takes us back. I probably got it. There we go. That's back to 1999. So you've got the FTSE now breaking out of a really long 15-year consolidation out here. As long as price stays above 69.50, that is going to be a nice price move. Eventually, that'll take the FTSE up into about the 10,398 level. Right now, trading just above the 7,000 mark out there. Quick peek at what went on over in Asia last night. Yeah, the Nikkei was up 32 points. Almost looks like a doji candle out here. Let me see. Yeah, it really is a doji. You've got two dojis in a row here at the Nikkei. Just suggests that the market may be getting a bit tired. I think that the Nikkei wants to at least fulfill that 1-to-1 price objective and get up to the 20,094 level out here. But the last two candle sessions suggest that it is a bit of a tired market out there. If we look at what went on inside of the Shanghai last night, down 32 points, no big deal there. Of course, it had a doji candle the day before, so we had some leaves falling off the tree. But really, I'll take a look at yesterday's candle more more as a inside day that says the trend should continue, the trend that it came from. And we'll finish this off and take a look at the Hang Seng, up about 0.5%, up 128 points. What we know about the Hang Seng is she's trying to make it up to the 24,988 level right now, trading out 24,000 or closed out 24,528. Okay, so as I mentioned yesterday, as I mentioned on Monday, choppy market. That's what you should expect today. You should expect that outlook tomorrow. You should expect that outlook on, tomorrow would be Thursday, then Friday, and then probably Monday and Tuesday before the skies start to clear up and the markets resume their march higher. Now, it's possible that today was the buyable low. I mean, I went ahead and bought the futures market. I went ahead and took a long position at the price that I gave you yesterday, which was 2,082.25. I watched this morning here as the ES Mini. This was at about 8 o'clock this morning as price came down, tested that level, rejected that level, made a seventh inning stretch formation to the downside. That means that G wave to the downside, that's coming off of the high out here at 10:30 in the morning. That was on March the 23rd. Nice little bullish engulfing to follow up. Now what we're watching for is to see if we get a close above its TAS market. This is a 30-minute chart, by the way, that we're looking at, to see if, in fact, we get a close above its TAS market profile resistance level right around the 2,087 mark. So hopefully it can get above that. If not, then we continue to see a chop out here. But price did get back to a level. We talked about it yesterday. Said you'd be seeing your home screen. Which one's my home screen? Oh, sorry about that. I know. How about that? I've got several monitors here, and so here I thought I was showing you my screen, and of course I was really just talking to myself. Of course, something in the radio business, you are talking to yourself, are you not? Here's the chart that we're looking at. Thank you there, Al. Got nothing like having a wingman. You got to have a wingman. If we take a look at where that high that I started from, in order to, let me pull this back here a bit further, in order to create that seventh wave to the downside was right here. It was the high that came in during the 10:30 hour, and that was back on the trading day of March the 23rd out here. So it makes 7 waves to the downside, runs right into that level of potential support. Now, look, if the market falls apart, if it craters here today and it gets below 2,082.25, that will tell me that the buyers have lost control of the market. So we've got a little bit of resistance right now. We'll see if, in fact, that level can be taken out. But still, I expect sideways, choppy action out here. Nothing has changed that opinion, but just take a look at the short-term chart to let you know what has taken place as of 9:14 a.m. on this wonderful Wednesday morning. Let's go take a look at the daily charts out here. Let's go take a look at the daily charts for the futures contracts. Let's look at the NQ. Let's go take a look at it. Now, if we take a look at the candles over the past couple of days out here, just some really small-bodied candles. In fact, price still traveling inside that March 20th session out here. So it certainly has not given up the ghost. In fact, if we get the NQ to close above the high from March 2nd out here, that high is 44.76. That's going to set up your A to B equals CD to the upside. That A to B equals CD to the upside pattern, that's going to give you a price projection. 1-to-1 gives you a price projection of 47.19. That is not where price will stop. Price will continue to move on into the 48.38 level, and I would suspect that we would at least see that going into the May time frame out there, and you're trading at 44.36. So for the month of April, our expectation, the entire month of April, we ought to see about a 44 to 48, at least a 400-point move. Maybe it's more than that, but my initial price projection is going to be about the 48.38 level inside of the NQ out there. If we take a look at the S&P futures out here, S&P futures, if we look at the retracement, most recent retracement from swing point low, which will be our February 2nd level, up to the high that was put in here on February 25th. We'll see it has not even done a 0.618 retracement. That says, hey, strong like bull out here. And that's exactly what will take place when we see the ES Mini get above that February 25th high, that high being 2109.75. Once it does that, that's going to set up your A to B equals CD pattern. That's going to give you a price projection again, inside of the S&P futures contract, the 1-to-1 is going to take it to 21.74. I suspect 22.13, more likely the initial target inside of the S&P futures. Let's go take a look at the dog out here. That being the Dow. The Dow here being the indice that has struggled the most. However, let's put this in perspective, right? Because maybe that's not an accurate statement. If we take a look at coming from the swing point low from February 2nd all the way to its high on March the 2nd, we'll also see, maybe it did a 50% retracement. So its retracement inside the futures contract here, even less of a retracement than that of the S&P 500. So we've seen some struggles here over the past several days. We take a look at the Dow. When I take a look at the Dow and its summation index, the price oscillator, that's where it shows, some real struggling that's going on. But once the Dow is able to take the futures contract, is able to take out its high 18,188, that's going to go ahead and set up your A to B equals CD pattern. That A to B equals CD is going to give you a nice price projection here of, let's see here, what's that going to give you? A price projection of 18,853, more likely 19,208. And I expect that we will see those numbers hit between now and the May timeframe out here. So and maybe it goes beyond that, but that would really be about the minimum that I would be looking for during this next move up. And it's going to be a nice move up. Look, folks, you don't have to believe me out there. But you should go back and say, hey, when the market was falling apart, Steve Osan was, and this was in October 2014, he was one of the few that was saying a major bottom is coming. And what have we seen since that October low? Absolutely a major bottom in the marketplace. Now, and that major bottom was what? Going to take us up into the end of the year. We certainly had that nice Santa Claus rally. And then we got into January, and what did Stevie say? Market is going to pull back, and it's going to make its 2015 low sometime towards the end of January. Well, that happened on February 2nd, the first trading session in February out there. That is a major low. Now, look, if that low gets taken out, we'll come back and we'll revisit what the markets are doing. But until that takes place, you've got to go with what the actual forecast is. And that forecast is that there's going to be some kind of additional low, could have been put in this morning. Getting back to that level here in the S&P, the chop could be just simply moving higher than chopping around. We'll see. What I can say is that I do believe that there's going to be the next significant low, if it wasn't today, will be put in between today and maybe next Tuesday. You can't hold me to the day, but I'm pretty good to the day, or at least within the range. And then we're going to see the market just take off topside. So for those of you that are looking for the shorts out here, you got to put them away. I'd say just put them on. But that's because summertime is coming. Put them on, go to the beach, have some fun, fire up a margarita. Maybe, hey, how about that Kraft and Heinz out there? Hey, it is summertime. That means long live Grey Poupon. Grey Poupon should live forever. Hey, this is Steve Rhodes. This is TFNN. We'll be right back, folks. Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, if you're a holder of Kraft Foods, you got a nice little premium here this morning after the, I don't know what you call it, the merger between the buyout, between the injection of money, between 3G and Warren Buffett into Kraft Foods from Heinz out there. What's your favorite Kraft product? Now, many people might think of Kraft and they might think macaroni and cheese, Kraft macaroni and cheese. Hey, I remember, was it Kraft macaroni? Maybe it was Stouffer's mac and cheese. I can't remember. It was one of the two. That's how I survived getting through college out there, was on that and spinach, little Popeye spinach, those frozen spinach souffles out there. It was cheap. It was cheap, and it filled you up. So let's see if it was, I think it was Kraft mac and cheese. Now you got the ketchup. Maybe they can package it. Now, you wouldn't put ketchup on macaroni and cheese, would you? No. So you got products like what? Miracle Whip. Now, what's the miracle in Miracle Whip out there? Now, people either like Miracle Whip or they like mayonnaise. Which one are you? I'm a Miracle Whip person. Of course, that means maybe about once a year. Do I even let that stuff get into my veins out there? Not too much white stuff. There can't be anything good in there. I tried the health version of that product, that Veganese, and that didn't do it either. That was deep six pretty quickly out there. So it was I think we'll just go ahead and pass. You know what is good though? You can mix tuna if you like tuna out of a can, you can mix that with, tried an avocado, so that's healthy for you, avocado and mustard out there. Believe it or not, it's a pretty good flavor. That's where that Grey Poupon comes in. In any event, I know you didn't tune in this morning to hear about food out there, but how about that deal? These guys, instead of owning the actual grocery store, they own the things that go into the grocery store out there. So pretty cool move. In any event, let's go take a look at what else is going on inside the marketplace. Let's go take a look at the currency market out here. The euro versus the U.S. dollar. Clearly having put in a decent bottom out here. We noticed that last week's candle formation was that key reversal session out here. I'll go ahead and put that back up on my screen for you. If you trade currencies, you really should be looking for, in my opinion, you should be looking for long entries on the intraday chart. A to B equals CD patterns to the downside, retracements, something along those lines on 10-minute, 30-minute charts out here. It really does look like with that key reversal session. Let me go ahead and delete this. And that's what really took place at the top back in May 2014. So it's not a guarantee. But with regard to a signal and the way that the market communicates to both you and I, it's a really strong signal. And it's a strong signal worth paying attention to. In fact, let's go take a look at an intraday chart on this. Let's go take a look at let's look at a 10-minute chart for the euro. Now, this chart here that we're looking at has got a 15-minute delay on it. But let's see if this thing off of that bottom, if we have had any kind of A to B equals CD to the downside. Yeah, I can see one out here already. So here, let me move this back here just a bit further. Oh, that's not good. That's just there we go. That's the flat line. So it looks like the low coming in here, March 15th? I guess that was the beginning of the week out here. But you certainly had an A to B equals CD to the downside on a 10-minute chart. Looks like maybe a couple of them. Here's one that we can take a look at out here. And I would just continue to look for these type of patterns, if you're trying to get long this currency pair. Here you had an A to B equals CD, makes a little bit more than a 1-to-1 A to B equals CD. Looks like you had another one out here. Close to another one. It doesn't look like this one actually even fulfilled itself out here. I don't think that it did, so it never made the full A to B equals CD down there. Let me see if there's another one out here. So this thing is really making more A to B equals CD to the upside patterns out here. So it does look like we have seen a turn, at least for a while, inside of the euro. And at the first place where you probably start to see, well, let's take a look at this. Let's come back to May of 2014. Again, this is the daily chart that we're looking at. And if we just take a look at retracements, you got to believe that the euro against the U.S. dollar currency pair has got legs up into the 118.09 level. And that's going to really be dependent upon what type of bar as price moves into that area, if in fact it does move in there. And if it's moving in with a wide-ranging bar, what that's telling you, what it's telling me, is that it's not done. In fact, that it's going to do what is more normal, which is a 0.618 retracement of that move down in the 126 level out there. So at this stage here, if you're looking for a currency trade, I'd have to say it's the euro to be focused on out here, because that one's given a pretty nice signal out there. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow 19 points traded at 18,030. S&P up 5 at 2,095. Composite up 6 points at 5,000 even, Steven. Russell 2,000 up 1.25 points, trading out at 1264. The DAX back 48. The FTSE down 4. Gold up $7, trading at 11.98. Silver up 12 pennies at 17.10. Light sweet crude up 48 cents at 47.99. Lead the charge to the upside. Well, of course, it is Kraft. You've got Lexmark. There's a deal out there between Lexmark and Kofax Limited, $1 billion deal out there. there. You've got Amazon to the upside. That's up $3. GoPro is up $2. Lumber Liquidators up $3. Williams Company up a couple of dollars. Valero is to the upside. Anheuser-Busch. You've got United Health Group up $1. To the downside, leading the charge out here, we've got Apollo Group, APOL, off 17%, down about $5. Tesla off $4, down a couple of percent. Biogen, BIIB, off $7.58. That's 1 6/10%. Nation Star Mortgage down 10%, off $3. Baidu off about $3. You've got Air Methods Corp down 3.5%, off $1.78. That's what's going on as we take a look at some of the details, some of the stocks in the market out here. Let's take a look at some of these stocks. Let's go take a look at Biogen, BIIB. Let's go see what it is doing. So down $7 out here. You had this thing made a high, gapped up with some nice volume on Friday. Volume behind the move, 10.6 million shares. You are now inside that gap as we speak. That says that what is likely to take place is a test of the high from March 19th, perhaps the low. That low is 431.33. The high is 439.90 out there. The volume again on that breakout was 10 million shares. Yesterday, the pullback, 2.5 million shares. So you're coming back with light volume. So far today, 179,000 shares. And that is on Biogen, BIIB. Let's take a look at Apollo Education Group. That's off 18%, down to $5 as we speak. We take a look at it, gapping down. Now this is the second gap to the, that was the Grey Poupon apparently, as the second gap to the downside. This now is fulfilling its 1-to-1 A to B equals CD. That 1-to-1 A to B equals CD would have given you a price projection of 22.23, but the way that this is moving down here this morning, looks like it wants to do more than, actually that A to B equals CD is no longer in place. That's an old one because I can see the C point took place a little bit later. Let's go take a look at where this is actually headed to now. Let me take a look at this, pull this back. Apollo Ed. So Apollo Ed, this thing had broken out. This thing had broken out back on October 23rd, 2013. And you are now down below. That breakout, by the way, was with 23 million shares. Last time down here, it was tested with 1.42 million shares when it had moved to the upside out here. So this thing has some fairly decent support. The gap itself has not totally been tested. Looks like right around the 2120 level out here is where Apollo Group may want to head to. If it breaks through that, let me put this on a weekly time frame out here. If it breaks through that level, then Apollo Education Group, oof, this stock chart does not look good. Boy, the further you pull it back, the worse that this thing looks out here. So where would this thing be pulling back to? Wow. Not good. Not good. This would probably pull back into the 1999 levels out here, and that's right around the $7.70 mark. So if you were in Apollo Ed, boy, you better hope that this breakout or at least the $17 area holds. APOL is the ticker symbol. Hopefully that is not inside one of your holdings out there. Let's take a look at Tesla. TSLA is the ticker symbol. Let's go see what this thing is doing out here. This is the weekly chart, just traveling right around its market profile low on the weekly basis. It's above the support level, so that's good. We take a look at on the daily chart out here. The daily chart also shows it's in between its market profile, so just really consolidating down around the bottom level. This thing did have a bit of a sign of strength out here that took place on March the 19th, but ran into resistance in its TAS market profile high. That's on Tesla, TSLA. If we look at Baidu, BIDU is a ticker symbol. That's off about $4, down about 2% here. Now, Baidu had a nice wide-ranging bar. This was back here on March 18th as well, but not really any significant volume behind that move, 3.5 million shares. Where it's got the volume in this breakout, in essence, took place back here on February 13th. There you had 7 million shares. So at this stage, Baidu is trading down into the February 12th swing point. The Baidu should have some pretty good support at the 204.04 level out there. No change in trend yet underway inside of Baidu. Just a big old consolidation ever since about the time period of July 22nd, 2014. So really hasn't done much since that time period. The top of the consolidation, if you will, about $250. The bottom of the consolidation, right around the 197 level out there. Baidu is the ticker symbol. Let's take a look at some things here, moving to the upside. How about Stamps.com? STMP is the ticker symbol. That's up 17%. Stamps.com, they announced the intention to acquire what? Online shipping company Endicia from Newell Rubbermaid. If we take a look at Stamps.com, gapping up this morning. Volume behind the move so far, 138,000 shares. Looks like to me this is at all-time highs, but let's go and confirm that. Let's pull this back on the weekly chart out here. Yeah, if we take a look at A to B equals CD patterns inside of Stamps.com, our A point is going to be all the way down here at the August 13th level. That's your A point. Your B point out here on October 21st. Your C point down here on April 28th. This thing is already made the 1-1.272. You ought to see Stamps.com shoot for the 76.98 level. That's your 1.618. A to B equals CD pattern in Stamps.com. Also moving to the upside, we've got GoPro. Let's go take a look at GoPro out here. GPRO. This looks to me like this has put in a bottom. Now let's pull this back. Let me take a look at GoPro. One of my clients is in GoPro. I remember looking at this for him a couple of weeks ago and suggested that he stay with his position, and that what he watched for is this low right here that took place on March the 11th. So it must have been March the 11th or March the 12th that I gave him that information. And the reason is because it made that seventh inning stretch pattern to the downside out here. So it made it pretty easy. Your stop would be any kind of a tick below or close below that level being $37.13. So now we've seen just a gradual move to the upside up here inside of GoPro. It's in that fourth wave to the upside, so it's not exactly had a ton of action. Right now, what you want to see is GoPro close above 45.07. That would be very bullish with regard to a change in trend from the standpoint that we haven't seen GoPro really trade above its market profile highs since February timeframe. So GoPro at this stage, may have formed a decent bottom out there. GPRO being the ticker symbol. Let's go take, I don't know, okay, I know what. So when I did send him the information, I also sent him the information on this descending price channel. So as we take a look at this descending price channel, that is where GoPro is going to really run into some resistance. And that resistance level is going to be the top. So right now, that would be projected in the $52 area. I can't, it just depends on which week. This is a weekly chart, by the way, that we are taking a look at. So the question is, which week does GoPro make a run for that? If, in fact, you can see it close above that descending price channel, that would then signal to me, should signal to you as well, that GoPro has, in fact, broken its descending trend out there, and that would be very bullish. But it looks to me like that is what GoPro wants to do. That's taking a look at the weekly, as well as taking a look at the daily chart out there. We've got Hain Celestial. That's up 3%, up a couple of dollars. No real news inside of this. This just continues to gradually move higher. This took out a B point on its weekly chart recently. That B point had formed the week that began December 29th. Now, the volume there, because of the holiday, makes it a little bit difficult to assess. That was 3.6 million shares. That B point was passed with 4 million shares. Wasn't exactly done with flying colors out here, but it was pushing in there with 9 million shares on February 2nd. We're going to say you're pushing in and you get up over it. That's not too shabby out there. And that is on Hain Celestial Group. So the question becomes, where is Hain Celestial Group headed to? Well, on the weekly chart out here, the A to B equals CD pattern is going to give you a price projection somewhere in the vicinity of $71.56, maybe $76.90 out there, Hain Celestial. Maybe there's thought that they'll go ahead and be bought out as well out there. just to take care of the other parts of the grocery aisle that Kraft and Heinz don't already occupy. Let's see, what else do we have that is moving? Well, we looked at the euro. We looked at, let's go take a look at the metals out here. Let's go take a look at the Goldilocks. Speaking of descending price channels out here, well, in the case of Goldilocks, we know it broke its descending price channel, came back, tested it, rejected it, and moving on up. Moving on up says that gold's going to make a run to 1205. That's nothing more than your dead cat bounce, your 0.382 retracement level. Will gold move beyond this? The answer to that question is absolutely. Don't you like it when I have conviction in what it is that I say out here? I mean, what good is it if I don't have conviction? Let's go take a look at this chart here. Let me share this with you if I can find this. Pull this up on the screen. You know that when gold was making its highs, I said you got to be careful out here. And why was Stevie saying you had to be careful? Well, one of the reasons was it wasn't because of what I was saying. It was because of what the large commercial traders were saying. They were saying, gold is going to move lower. Well, if we take a look at that chart, that's what I'm put up on my screen out here. So every Friday, 3:30 p.m. Eastern Standard Time, the CFTC released their commitment to traders data. A lot of great information out there would confuse the heck out of most people. So you got to find the correlations that really work and really make sense out here. And if we take a look at this, when gold, this is a weekly chart, by the way, that we're taking a look at. When gold was making its high right out back here in the January, February time frame, what large commercial traders were doing was they were upping their ante to their large net short position. It wasn't the all-time high large net short position, but it was up at levels where in previous situations where we started to see gold move lower out here. Now, these commercial traders, you can't really use this data as a timing piece of information. This is like a big yacht, a big boat, a big yacht out there, a big ship. This is like Carnival Cruise Line. It takes a while to make that turn out here. Well, it takes a while for these folks to go ahead and put their positions. Now, this data here is as of last Tuesday. So I don't really know what took place, nor do you, on Wednesday, Thursday, and Friday. Well, Friday, the data is released. What I do know is that the large commercial traders who, back here when the highs were being made, have exited those net short positions in a relatively rapid way. I mean a straight way to the downside. No, they have not gotten down to the what I'll call the less net short, because they're never really long. It's all a matter of analyzing the data based on the short and based on their shorts as a percentage of open interest. That's the way I found it to be most useful for us to take a look at. And they have just simply so with gold coming down, testing some swing points, breaking through that descending price channel, knowing that the large commercials are now looking at the other side of the trade. Now, is this some type of long-term bottom? I don't know out there. We'll continue to watch what the commercials are doing out here. But at this stage of the game, it looks to me like all signs point to, and I expect that what we will see next week is when I take a look at this data, we'll probably begin to see that turn out here as well. But it does look to me like a nice buyable bottom most certainly was in, even that breakout of that descending price channel. So what you ought to do is maybe what happens here with gold is gold gets up, tests the 1205 level, backs off a bit. Maybe you can look for some type of retracement to get on gold. But likely what we're going to see here, this is why I have some conviction behind that statement that I do believe that it's not just a nice buyable bottom, but it's a buyable bottom where we ought to see the 1244 level. Now, they would not even, it's not even beyond comprehension to see 1272 or even back to the 1300 level out here. But I think 1205 really should be a foregone conclusion. And most likely what you're looking at is a 1244 level inside of Goldilocks. And hey, let's not leave out hi-ho silver out here, for goodness sakes. You've got the silver contract, which was really making a run for it out here. If we take a look at the silver contract, well, that's the weekly. Let's put this on a daily basis out here. We take a look at that. How about that for breaking a descending price channel? Boy, broke it nicely on March 19th, and then big wide price spread, accelerated volume back on the 20th. This is already up to or very close to the 0.618 retracement of 1727. You'd have to say silver is on its way to 18 buckaroonies. It's right now trading at 17.05. Okay, let's go back and take a look, because that's what's going on inside of the metals. Now, you got the Dow's off 68, the S&P is down 3, the composite's up 24 points. We get back from this break, we'll go quickly take a look at the summation index. We'll see, hey, the composite just dipping below the zero line out there. That's not a good thing. Not a good thing out here. This is Steve Rhodes at TFNN.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 58, S&P off a couple, composite down 24, Russell's off 5 points. Let's go check in on the... So if we take a look at the wider swath of the market first, let's take a look at the New York Stock Exchange. Still in bullish formation out here. Price oscillator still above the zero line. The reading as of 9:54 a.m. Let me move that over there. Positive 29.72. So the trend is still to the upside in the wider swath of the market. Hey, the Dow, as we've been mentioning, this thing has been a real laggard when we take a look at being able to try to point some type of direction out here. Only spent 2 trading sessions above the zero line of its price oscillator here recently. But damage-wise, still really not even that much damage price-wise done inside of the Dow. The composite as we speak right now. Now, these readings out here really don't do us a whole lot of good intraday. It's really going to be what's the reading at the end of the day out here. So you do have the composite just slipping slightly to the negative side intraday, but if price gets down there, tests that area, rejects it, closes back above it, tells you that the buyers are still in control of the market. So that's what's going on inside the wider swath. Inside the next widest swath being the composite, and then, of course, you've got those 30 stocks out there with the Dow. With regard to that 30-minute chart that we took a look at, that 2082 level right now, that is being tested here. We've seen a piercing through that level, 2082.25. That's going to be the key number to be watching throughout the day. This candle hip course here, this does not complete for another 4.5 minutes out here. So I don't know if 2082.25 is going to act as support or if we're going to see a break of that area. So folks, stay tuned. I believe we've got Tom's Market Minute coming up here, and tune in for the second hour of the Trader's Edge. If you're off to start your Wednesday, have a great day. And as always, thanks so much for joining us. It is Wonderful Wednesday. That means we've got a lineup here. You've got, after my second hour, you've got Basil, you've got Larry Pesavento, Daryl Martin, David White, the Tom O'Brien Show. So have a wonderful Wednesday, folks. Look forward to seeing you soon. Take care now.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials right now trading down 58. You get the NASDAQ off 28. S&Ps are off 4.5. Gold has tried to break through that 1,200. Right now, we're up 530, trading out at 1196.90. You have silver up 3 pennies at 1701. And oil's up 53 cents, trading at 48.05. We'll get those oil numbers in the next, actually 30 minutes from now. Bonds, the bonds both flat. You have the 10-year 129.04, 30-year at 165.09. Both of those look like they want to get into higher price. Now, King Dollar, we're going to get a new name for King Dollar. Haven't figured it out yet, but bottom line, it has been the king for quite a while. Bottom line, this is a reversal. We're down 431 ticks. You're at 97.01, and the euro is up 50, trading out at this 109.44. Now, I'm going to go over to the IBB first. The IBB, folks, is the NASDAQ Biotech Index. The Biotech Index has been on a tear for 3.5 years, excluding 3 months in 2014 when it went down 75 points in a heartbeat. We went from 275 down to the $207 level. What we have out here, this is the 4th day in a row, and this is why you see the NASDAQ getting whacked, is that the IBB has just gone from 374 to 350. You do have volume happening on the way down. That, no doubt, is going to affect the NASDAQ. I do expect you're going to get some kind of a bounce out of the IBB. Why? Because markets like to bounce, period, in correlation to going up or down. What you also have, though, is if we go over the NASDAQ, the composite, what we've done thus far is this. The high of last week was 5,001. Or actually, not last week. That would be the exact day that we're talking about is on 3/18. That was the Fed day. That high there, okay, had, monster volume coming in. Well, let's put it this way. We had almost 900 million. You're coming into that, you're doing lighter volume. So what you have in the NASDAQ in general is that you're going to be into that level. You're going to have lighter volume. That's going to set up a nice bounce in the IBB. I suspect, we'll see where that shakes out, but I think that's going to be a shortable bounce. Now, let's go to the SPY. The SPY out here, what we've done with the SPY, SPY's trading at 208.60. We are down 21. You get 15 million shares traded. It's light volume. You're backing into the 18th with dramatically lighter volume. Yesterday, we only did 77 million shares. Today, you'll probably do about 80 million shares. Not a big deal. The Qs, the NDX 100, what you have with the NDX 100, same type of setup. Now, the NDX 100 is getting some price destruction out here this morning. We're down 58 cents. You're still going into the sign of strength, though, that was out there on the 18th. Because specifically what you have is this, is that you have the aspect that on the daily, you had the volume come in. On the weeklies in particular, folks, we had volume come in to that swing point, had some juice on the way in. The small caps, we take a look at those small caps out here. What you have with the small caps are rolling over. I suspect that also is going to test the highs. Now, let's go to the gold market. The gold market, folks, wants to take off. We have hit 1199.30 today, and guess what? You have the volume behind the move again. So what we're doing is this. You're eating into the supply line in a great way. The supply line we're talking about was the supply line from the 6th of March. That was the high of 1,200, the low of 1162. And the 1,200, folks, is it psychological? Yeah. Does it mean anything? No. Okay, because the bottom line is we've been eating into that line. This gold contract wants to run up to 1233. I suspect, we'll see whether we can get any force there. We get some force, then you're going to have a shot to the top of it, of the 1308 mark. And silver is leading it, folks. Silver is the leader out here, and it's a leader in a nice way. Silver right now is trading at 1704. That little baby wants to run up to this 1850 level. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, and particularly because currencies are moving, folks, visit everbank.com/TFNN. Have a great one. Have a safe one. Look forward to speaking right back here tomorrow morning.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good Good day, Money Masters and Treasure Hunters. Welcome to the March 25th wonderful Wednesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to an extraordinary start of your day. Let's make sure that you and I, that we do everything we can to squeeze every ounce of energy out of that. I know I'll squeeze every ounce of energy that I have during the next hour or so. And let's always remember, you know, it's always good to have a vision, right? Because what's talked about is a dream. You know, a lot of people, they walk around, they walk and they talk and they do some dreaming. Nothing wrong with dreaming out there. In fact, you know, I don't know about you, but when I was in school, high school, you know, I used to look out the window and daydream. Dreaming is a good thing. But we got to remember, what's talked about is a dream. What's envisioned, well, that becomes exciting. But what's planned becomes possible. But here's the deal. What's scheduled is real. And I want to thank you for scheduling your time with me each and every morning. I'm absolutely here to serve you. So go ahead. Give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. This market's trying to get a bid. Right now, the S&P is basically about flat. Hey, call it in, because if you've got a question, I know one thing is for certain, that somebody else has got that exact same question out there. So a nice little random act of kindness. That's the way to start your day. Of course, this day being Wonderful Wednesday, none other than the Tiger Financial News Network, otherwise known as Hotel California. Let me get rid of this on my screen if I can. Oh, that's not going to be good. You can see my screen here go blank here for a moment. There we go. Now I can X that out. Yep. Okay, good. Okay, now we're back. And, of course, I'm Steve Rhodes. Welcome to the show right now. Dow is off 35 points. S&P is flat. Composite down 24 at 49.70. Russell 2000 off 4 points. DAX down 53. FTSE is slightly green out here. You know what we're going to do here this morning? Gold's up $6. Silver's up 6 pennies. Let's go take a look at the ETFs with inside the S&P 500. You got the energy sector, the XLE. Let me just switch to a couple different tabs out here. Workspace. Which one? Daily index. Okay, let's go take a look at the XLE. Let's look at it a couple of different ways out here. So you got the energy sector up 98 cents. Light sweet crude is only up 68 pennies out here. So let's go we'll go take a look at what's going on inside ExxonMobil, Chevron, and so forth. Here's what we know about the energy sector, the XLE. From low to high, the low I'm referring to, by the way, is January 14th. That's your swing point, 2015. The high I'm referring to is out here on February 17th. You go from the low to the high, and what do you get? Well, you get a retracement. That retracement, being the 0.786 retracement, takes you to the price point of $74. What we actually saw on March 13th was a low of 73.82. Just so happens that the high of that swing point from January 14th was 73.91. So price got into that swing point, which, by the way, was 52 million shares down there at that swing point. What did price do? It tested it with 21 million shares. That's right, 21 million shares going against 52 million shares, tested, rejected, and then moving higher. And you had some conviction, as we saw in all of the markets out here. Fed speak day, that being the March 18th time frame, moving up with 27 million shares. Now all that we've really seen out here with regard to this candle is 2-4. Today's day 5 of trading with inside the body of that candle. Now, most candlesticks, we have really 4 styles of candlesticks out there. And look, if you do not know your candlesticks, let me teach you. Let me teach you because that will teach you the way that you will use it for trading, no matter what tools you use, no matter what patterns it is that you use out here. Let me teach you, because there's, 35 or 40 different candles. They qualify as neutral candles. You need to understand what those neutral candles mean. There are some that are bullish reversals, there are bearish reversals, and then there are some that are just simply fancy schmancy candles that are out there. And beyond the fancy schmancy, what you've got is 2 continuation candles out here. Now, if in fact you see the XLE, the energy sector here, get above the high of March 18th, and typically it does it within about 5 to 7 sessions. So we're in session number 5. The high, by the way, is 77.95. That is called a rising 3. And then we got 5 candle sessions out here. Yeah, I know. It doesn't have to happen in 3 sessions out here. You see a move above 77.95. You've got a continuation candle with a move to the upside. Now, we've already tried to bust out the lows, couldn't do it. What does that mean? Well, you know how the song goes that Tom sings. If you can't bust out the lows, it'll try to bust out the highs. Well, if you get that continuation move that we're talking about, that's going to be a fairly decent indication. We just simply look at retracements now from high to that low that was put in on that March 13th test. You know, you moved up into the 0.382 retracement level with what? Wide-ranging bar accelerating volume. Markets don't end on candles like that. That says it's going to continue. That says the XLE wants to get up to at least 79.14. But maybe what it really wants to do is try to bust it up. Maybe it really wants to get up and test that high from February 17th. Here's the point. I know there's a lot of people that are short the energy sector because the energy sector has been struggling. I'm telling you, the energy sector, as sectors go, have given you reversal signals. They've tried to test the lows out here, and they have failed on volume. They've tested 57 million shares and 52 million shares, and they just simply have rejected that area out here. So the energy sector looks like it wants to run higher. Now, what does that say for ExxonMobil, Schlumberger, Chevron, XOM? We ought to see a similar looking chart out here. In the case of ExxonMobil, let's pull this back. What was it doing? Well, in the case of ExxonMobil, looks like this was completed an A to B equals CD to the downside out here. Let me get rid of this. Made a 1.272 expansion. That much we know out here. The little doji candle, a little bullish engulfing that very next trading session. Trading inside its market profiles out here. Doesn't look like a 3 drive to a bottom formation or anything along those lines. If we do take a look at the A to B equals CD to the downside pattern that it created out here. I don't know if this is working. There you go. You get your A, your B out here on December 16th, your C out here on December 23rd. So it makes a 1-to-1 A to B equals CD, gives you a reversal signal. That says that ExxonMobil wants to run higher as well. Key is going to be, can it get above 85, 83? If we take a look at Chevron, CBX out here, you got the C, there's the V, there's the X out here. Okay. I know my digits know where they're at, but I just visually couldn't see it. Now, as we take a look at Chevron came back and tested a swing point. This is the December 16th swing point. That had 12 million shares, but it was tested with volume, 20 million shares. That was on January 30th. Well, January 30th was tested. Again, that was 20 million. That was tested with 8 million shares. Yep, sellers are gone inside of Chevron. If we take, looks like I had a trend line here that we initially began to build, and that trend line, if we go ahead and we extend that trend line has basically been busted. So it looks like Chevron is going to go ahead and try to change its trend out here. Looks like it's really just setting up a small E to B equals CD to the upside. What does that look like inside of Chevron? Your A point down here at that little hammer candle on March 13th. Your B point out here on March 23rd. Your C point looks like perhaps yesterday. 1-to-1 A to B equals CD says 111.19, maybe 113.10 inside of the move, inside of Chevron. So inside the XLE, if you are short, be careful. And if you're long, congratulations on that move out there. Now let's go take a look at the healthcare sector, XLV. I heard during Tom's update, caught a little bit. He was talking about the IBB. Well, let's just take a look at the XLV, the healthcare sector out here. Let me just one more thing. Let me do one more thing. Let me just see. Where's the XLE? I'm looking at a different screen, so I'm not purposely looking away from you. Just want to see if on my other charting tool, if there was anything here to really pay attention to. You know, I guess you would do this. I'll put this chart up on my screen out here. So we take a look at the XLE for you and just show you all the different tools, all the wonderful tools here at TFNN. So inside the energy sector, as it was making that hammer candle, so it was testing that swing point and rejecting it with lighter volume out there, was also making that fourth wave to the downside pattern out here. And it looks like you've got a little MACD cross as we speak right now. So it does look like the XLE is getting ready to also make its first A to B equals CD pattern to the upside out here. So I'll just point that out. Now let's go take a look at that XLV, that healthcare sector out here. Now, in the case of the healthcare sector, I'm going to go ahead and put this chart up here. The case of the healthcare sector, a couple different counts out here, but very likely the count that's in play here is that it made that 7th inning stretch pattern. That was on the trading session of, what was that, March the 21st out here. So it makes that candle session, makes that 7th inning stretch. We've seen price go ahead and back off. This is going to be really key. So the energy side, the healthcare sector, I believe it's the number 3 weighting, second or third weighting inside the S&P 500. So it's going to be here. You know that I'm calling for the market to be in this choppy formation area that we're in here for the next several days, and then the market's going to go ahead and take off through the rest of summer, through the rest of spring into the May time frame, but then pull back a bit and then move on higher through the summertime. We'll have the July 4th fireworks and so forth. Now, what's going to be a real clue is going to, in my opinion, what's going to be a real clue is taking out the high from March 21st inside of the XLV. And at that stage, that high, by the way, is priced out at 76.01. So that's going to be something that you want to pay attention to. So far, the retracement, the pullback inside the XLV, no real big deal out there. Nothing really big. If we take a look at the volume, the XLV made a high with March 20th with 9.5 million shares, pulls back with 4.6, 8.4 yesterday, so a little bit of volume. Still not much in the way of price damage out here inside of the XLV. Let's take a look at the, so we'll have to do it when we get back from this break, but let's go take a look at the XLP, which is the consumer staples area. That too trading a bit higher this morning. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Chop, chop, fizz, fizz. Oh, what a relief it is. You got the Dow down 16 points. S&P is up 2. Composites up 15 now. Russell down about $3.70. I mentioned the consumer discretionary sector out here, the XLP. If we take a look at it, using a couple of different tools out here, if we take a look at it, we'll use the Rhodes Momentum Indicator signals out here. Now, when you see the signal turn to the purplish color on your screen, that tells you that you just got a buy, confirmed buy signal out here. That took place fairly early inside the XLP. Out here, it took place on the trading session of, that was the trading day of March the 12th out here. Now, if we take a look at the XLP, it's trying to get above its TAS market profile, which is right around the 49.23-ish type level, closing above that. Well, and as well as closing above yesterday's candle session. Yesterday's candle session was a bearish engulfing candle. So let's see, the high was either yesterday or the day before. Let's see, you get 49.27, 49, both 49.27. So any close above 49.27 is bullish inside of the XLP. It's going into this little downdraft here that had 12 million shares. So you've done 3 million shares in an hour of trading. That's pretty good volume. That's really good volume. So you're moving higher inside the consumer. Now, consumer staples is maybe 10%. Something like that of the S&P 500 out here. The energy sector is only like about the 5th or 6th weighting structure. So it used to be a more heavily weighted portion of the S&P 500. But, so you got the energy sector, that's rejected lows. The XLV, that had backed off after a couple of days. We know what to watch for there with regard to it being able to potentially take out the highs. Again, choppy market. We should expect nothing more than just kind of a choppy market here to last, just like the weather forecaster just simply telling you got cloudy skies. Cloudy skies with a chance of rain, a few thunderstorms here and there. That's really what the market has in store for us for the next couple of days. It's going to make, it's probably going to make bears feel like, aha! The market turned. You had Yellen come out. The market went ahead and took off. Then you had it move a little bit higher on Friday, and people are going to be starting to maybe to lick their chops. And it's just like the folks said, there's not a lot of folks that actually believe in gold at this stage here. I'd tell you that I know somebody who does. Commercial traders are believing in gold. I know that the folks that pay attention to those trend lines, channel lines, know that they're believers inside of gold. And so I actually prefer the mere fact that there are many people skeptical of that, because that just bodes well for prices to move higher out there. In any event, let's get back and take a look at, let's go look at the ETF structures now. We haven't done that, the ETF structures for the indices. So let's start off by taking a look at the QQQ series out here. What do we know about the QQQ series? Today's pullback so far with 7.6 million shares. Yesterday was 22 million shares. So, and volume typically drops off right around now. We'll see what kind of volume at the end of the day. It's still going into this 40 million share day from March 18th out here. Price was moving into that March 20th swing point with volume. That had 22 million shares. Price moving in with 31 million shares back on March the 20th. says to me that price is going to go tag 109.42, and my suspicion is that price is going to get above 109.42, make its way to 114 to the 116 area. That is inside the QQQ series ETF. Good support ought to be 106.82 inside of the Qs out there. If we take a look at the Russell 2000, the IWM, off 50 cents this morning. The Russell 2000 over the last 2 days, no price damage whatsoever. And we're looking at two spinning top-ish, high wave-ish, doji-type style candles out there. You've got a confirmed A to B equals CD up already inside of the IWM. 129 to 132 is the price range where it is going to target. That's the IWM. If we look at the SPY out here, if you take a look at the SPYs, they too not really much in the way of damage over the last couple of days. Two little doji style candles. That's the IWM. Now, you don't want me to do the IWM again. My goodness. Let's really look at the SPY out here. That makes it a little bit easier. There we go. If we take a look at the SPY, so far pulling back this morning, 22 million shares out here. Yesterday, 77 million shares. So pretty decent volume in the first hour, but volume will go ahead and drop off. Volume, actually price-wise, you've got the SPY wanting to get to the 212.24 level. I believe it'll cross that, and threshold get up to 218 to 228. Let's go to Bob in St. Pete. Bob, thanks for calling. Thanks for holding. How you doing this morning?
I'm doing fine, Steve. Thank you.
Excellent.
My question is the correlation between the price of a barrel of oil and the airline stocks. It seems that when the oil goes up, the stocks go down, and vice versa. And also, I own American Airlines stocks. So
okay, Bob, stay on through this break if you would for me. We'll come back. We'll take a look at American Airlines, and we'll take a look at that correlation for you. Okay?
Fine. Thank you.
Okay, we'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over $70 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 40. S&P is flat, down about half a point. We're going back out to St. Pete. We're going to be speaking with Bob, who owns American Airlines. AAL is the ticker symbol there. Now, Bob, I apologize because we were just going into the break there as you were coming on the air. So one of the first things you mentioned, I believe, was a correlation between oil and American Airlines. So tell me what you're looking at there and how I can help you.
Well, it seemed that I noticed that every time the price of a barrel of oil goes up, airline stocks seem to go down, and vice versa. And I don't know if that's a fair assessment or not.
Are you watching us on Tiger TV by any chance?
No, I'm actually a blind person. I listen on the computer.
Okay. So let me describe to you what I've done here. So I actually took the American Airline chart, so the upper portion, so those folks that are following us on Tiger TV, the top portion of this chart is American Airlines. And the bottom portion, what I did for you was I went ahead and I took the continuous contract for light sweet crude, and I went ahead and I inverted it. So therefore, folks, if you're watching, if the bottom portion of your chart is going up, it's really saying that light sweet crude was getting weaker. Price was moving down. That way, we can take a look at Bob's correlation to see if it if it holds water, so to speak, out here. And if we take a look at American Airlines made a low, Bob, back in October of 2014, just as the market did. How long have you been holding the equity?
I'm in at $42.
At $42. Okay.
Yes.
So it made a nice bottom here at around the price point of in the $28-ish range back in October. Now, American Airlines continued to move higher, and oil from that time forward also continued to move lower. Again, folks, if you're watching this on Tiger TV, the bottom portion of my screen is going up, and so that correlation that you're looking for certainly was there. What I would also say is that some of the bounces that we've had in light sweet crude as it's moved a bit higher, we've seen some sell-off inside of the airline stocks out here, but nothing of real significance. I would also say as I pull this stock chart back further, all right, so if we go back and use more data points on here, that correlation that you're referring to isn't as prominent. It's there at times. For example, Bob, if we go back and I look at August of 2013 through about the November 2013 timeframe, that correlation exists, but it's not. It starts to break apart from January of 2014, maybe all the way until June of 2014. So I don't know. I would say let's just trade the stock. more so as to what the shareholders are doing versus looking for that direct correlation, because it just doesn't indicate to me that there's a pattern that is consistent all the time. Okay.
No, right.
Okay.
Now, the airline stock dropped to about $2 since last week, and I don't. What's your opinion on what I should do?
Okay, so you're in the $40 range. It's at $53. Boy, in American Airlines. Now, I don't know what happened on the trading session of March 20th out here, but there was big volume inside of American Airlines.
That was. Yeah, I understand it was because they went into the S&P.
Okay, so they went into the S&P, and there was 137. Thank you. There was 137 million shares that traded in there. Now, prior to that, there was this consolidation pattern that American Airlines has been trading within since November 26, 2014, and that consolidation pattern, Bob, is between a price level of $45, somewhere around where you're in the stock, it sounds like, and $56.
Right.
And because it was pushing higher with volume, and what I mean by that is on March 18th, there was 18 million shares as it was pushing into about 13 million shares. So even before it was going into the S&P, it was pushing into a swing point with volume. If you see American Airlines get about $56, pretty good chance you've got at least an $11 run inside of this equity. Is tell me your plan when you entered the trade? What was the time period of the holding, and did you have an anticipated exit strategy? Were you looking at it? No.
Yeah, this was Steve. I just kind of try to follow along, and when I get nervous, I sell.
Are you nervous?
Well. No, I almost sold last week. Well, now I'm not real nervous, but because it went down to $2. But if it went down 3 or 4, I'd probably start to get a little nervous.
Okay. Well, let me give you maybe the so-called the nervous Nelly spot to maybe be looking at. On March 17th, this equity moved topside with 41 million shares, so it created a gap. Now, that gap is going to be your friend. That's wide price spread accelerated volume. If you see American Airlines close below 52.50, then what it's likely to do, it's likely to run somewhere to and I'll give you 3 different price targets. It's likely to run to $49.45, $50 and $49.45, or $50.45, or all the way down to $45.75. Those would be the areas if, in fact, you were to see a close below $53.69. If you do not see a close below $53.69, stay put.
Okay.
Okay, because what's likely to happen, it should at least go ring the bell at that $56.24, let me see, $56.20 to be exact out there. And I think this is more likely going to go ahead and take out that high. Now, I mentioned that it was a potential $11 run. Right. If it takes out that high, there are 2 potential patterns that are set up here for you. One is an $11 run that will take you to about $67. Another takes you to 74 or maybe even $81 out here. So here's the deal. If you do sell because it closes below that March 17th low of 52.50, then go ahead and look to get back in on this in the $46 area.
All right, gotcha.
Okay, because that in essence is the bottom of the consolidation, and you would be wrong on the trade if you see this close below. So you could get it around 46, and then you would close out the trade if it closed below $44. Because then it says the consolidation has failed for some reason.
Oh, that's a wonderful assessment. Wow.
Oh, well, it's a wonderful trade that you're in right now. And thanks so much for listening. And we really appreciate that. Anything else I can do for you?
Well, no, not right now. But I appreciate you guys, especially you, Steve. You're great. I really believe that.
Well, thank you. I appreciate that very, very much. So thanks for calling, and we'll look forward to speaking to you again.
Okay, Steve.
Yes. Take care. Yes.
You don't like mayonnaise. You know what's in mayonnaise?
No, tell me what's in mayonnaise.
Olive oil and eggs.
Well, I love olive oil and I love eggs.
They're both good for you.
Yeah. Well, now what's in Miracle Whip? What's the miracle in Miracle Whip?
I stay away from it.
You do? Okay. Yeah.
Tastes good, but I stay away from it.
You know, it's funny as we, as we're kids out here. So my mom, my dad, for whatever reason, they bought Miracle Whip. So right around Thanksgiving, I always liked the day after Thanksgiving because I would take up I'd take the dark meat turkey. I'd take some eggs and chop them up. I'd take some celery and mix it up with Miracle Whip and put that on a piece of white bread out there. Yeah. Wonder bread, because I grew up in Detroit.
Yeah, I grew up on that.
Oh, you did?
Oh, yeah, Miracle Whip and Wonder Bread, yeah.
Okay, yeah, absolutely. But of course, the older we get, we recognize that's probably not such a good food group.
Oh.
Hey, thanks so much for letting me know what's inside mayonnaise out
Have
there.
A great day.
Okay, you bet. That was Bob in St. Pete, and that comment he was referring to was, I think it might have been during the first hour out there, when we're taking a look at that so-called mega food deal between Kraft Foods and Heinz Brands. Of course, one of the things that I asked listeners was, hey, what's your favorite Kraft food? For me, I think it might have been the Kraft macaroni and cheese, although I don't think they make the frozen version. I think it really was Stouffer's mac and cheese out there, but I can't remember. It's been a long time since they've really dressed up mac and cheese these days, haven't they? You go into a restaurant and they got lobster mac and cheese out there. No, I've never tried lobster. I love lobster, but I think when I order lobster, I'm not going to go ahead and mix it up with mac and cheese. What do I know? What do I know out there? In any event, let's go back and take a look at some of these stocks here that are moving. You've got the Dow's now off 52 points. The S&P is down 3. I'm going to go back and take a look at the summation index for you. And inside the composite, NASDAQ composite is still below the zero line. That says that there's a potential shift in momentum if we're to end the day like this, and tells you that the sellers are in control. In the Dow out here, you've got the price oscillator down below the zero line. Of course, the Dow has been struggling, but in the New York Stock Exchange, not so much just yet. It still is in the hands of the bulls out here. But if it does get below zero, then across the board, the so-called choppy action I'm looking for would suggest that we might actually see even lower prices that you could buy into the market between now and this coming Tuesday. When exactly, I don't know. We'd be looking for some type of pattern set up out there. But with regard to these summation index and price oscillators, the readings on these are really only good for you and I at the end of the trading session. Intraday, it's really just not a great reliable tool. Now, we haven't talked much about the VIX index out here, so let's go do that. If we take a look at the VIX index, what it did yesterday was it formed a nice little hammer candle out here. In fact, you've got two hammer candles inside of the VIX index. The last two trading sessions, meaning March 23rd and March 24th. Now, a hammer candle is a wonderful tool out here because of two things. Number one, it tells you that the sellers, in this case here of the VIX index, that the sellers are trying to really hold a level, or buyers are trying to hold a level of support. It tells you what buyers are doing. And they're really trying to defend inside the VIX index. You'd have to say they're really trying to defend the price level of March 20th out here. Now, why don't I have price out here? There we go. It's $12.54. So unless you see, and really, quite frankly, if you see a close below yesterday's hammer candle, that would be key, 12.59. That would bode well for the bulls. That would not bode well for the bears out here. But at this stage of the game, the VIX index has put in some significant levels of support with those two hammer candles out here. Now, that's one way of looking at it. What we also know is that the VIX is pretty well below its 50-day exponential moving average, which is priced at 1551. You're at 1380 as we speak right now. That actually, when the VIX is below the 50-day exponential moving average, the market does basically two things, kind of moves sideways to higher out here. Right now, we're really, believe it or not, we're really more in the sideways movement. There's been a little bit of a pullback, but nothing that is really that significant as we speak. So, if I just round out this segment, I'm going to pull over here and take a look and see where the New York Stock Exchange. What the New York Stock Exchange right now has net declining issues of, only 168. That's really pretty positive I'm going to look at each day in my newsletter. I identify for my clients what the number is with regard to the New York Stock Exchange, and most people can get that net advancing, net declining issues out here. If I take a look at it, the actual number is 609. You would need 609 or more net declining issues in order for the bears or sellers to be able to take control of the New York Stock Exchange. Right now, we're down to minus 178, and the NYSE is off about 10 points. Geez, not much of anything out here. So I can't tell you, the number of points in the NYSE. I'll guess maybe it's 40 or so, but it's really about the number of issues out here for you to be looking at the end of the day. One troublesome fact out here that says that lower prices could be heading at us is really inside of the ES mini. Now, the real tug of war that is going on is right at this 2082.25 mark. We've seen one close below that level. Then in the last half hour at 10:30, a close back above it. Right now, that level is being jeopardized again. But if we close below 2082, if you had more than 609 net declining issues inside of the NYSE, the composite state where it was at, I would say the message to me would be more likely that we're going to see a further pullback over the course of the next couple of days out here. Not so much that I would go ahead and short it, but just because what I would be looking for, because the larger pattern, quite frankly, is for the market to move higher. And this is really a great opportunity. We're in a very favorable seasonal cycle that is in the market right now. And what you really want to be doing is you'd really like to kind of load up and take a look at whether it's individual stocks or some of the ETFs, whether they're indice related or they are sector related. I really believe that your better trade is to look for that next long trade to the upside that'll last through the end of April and beyond that, but at least through the end of April out there. So that's how it would set up. We'll do it just doing it during this segment versus the final segment out there, and that'll make things relatively easy for you. If in fact the VIX index were close to that 50-day exponential moving average, maybe I would change my opinion on the shortable side of the market. But right now, the market is really doing what it should be doing, what it was expected to do, what we anticipated, right? Isn't that Heinz ketchup? If I go back to that mega food deal out there, it's all about anticipation. And really, that's what I try to do for you each and every day, is to help you anticipate what the market might do. And so that anticipation, when we began Monday morning of this sideways market, that's really what is unfolding here. So there's nothing that's happening in the market that's anything different than what we anticipated at the beginning of Monday's session out there. So as we speak right now, 10:49 a.m. on wonderful Wednesday, the Dow's off 63, S&P is down 3, the Composite's off 32, Russell 2000 is down 8 points. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 46, S&P is down 2. You know, Bob in St. Pete, he's got me changing my opinion here about mayonnaise out here. Not that I'm suggesting that you use it, but it's never appealed to me out here. But the mere fact that if it's just made with just olive oil and eggs, I love eggs. So I went online during the break here just to kind of see if I could figure out what's the miracle inside of Miracle Whip. We might have to rely on Basil Chapman now, as I see out here. Now it says, with regard to mayonnaise, it says it uses olive. It says uses oil. I didn't see where it said used olive oil, but I'm going to. I know that Bob would not lead me astray. Now, what I would like to do is make it on my own out there, you know, because there's all different kinds of olive oils, right? So you want to make sure you're using a good olive oil, I suppose. And then, but now Miracle Whip. Here's the thing. It says with regard to Miracle Whip that is based on this patented emulsifying machine invented by Charles Chapman. So we got to see if Charles Chapman is related to none other than our old Basil Chapman out here. And he was the one that created a product blending mayonnaise product that was less expensive. So this dates back into the Depression time period. Apparently the miracle inside Miracle Whip was because of other ingredients that they put inside there, special miracle ingredients, that it was less expensive than that highfalutin mayonnaise out there. So in any event, that must have been a carryover from my grandparents down to my mom and father, who used it in things like tuna fish and of course that great turkey salad. In any event, so much for the food. But hey, look, I went ahead and gave you that market wrap as far as what to be looking for in any event as we went into that last segment. So nothing really has changed there. Gold's up about $5 right now. Silver is flat out there, and it looks like Basil is saying not fair food before his show out there. So I guess I'm making him a little hungry out there. Now, when I had this morning, craft food related, was that Grey Poupon. I love that Grey Poupon mustard out there. No, not much in the way of calories, and you put that on a nice piece of chicken. That's a good way to get some protein in you before you start a couple hours of radio. In any event, you've got Kraft Foods is up a nice $22 as we speak right now. Stamps.com, that's up $10. Or Rex American Resources, that's up 11%. REX is the ticker symbol. Let's go take a look at T-Rex out here. Why is this up? Looks like they're out with numbers here. Looks like 127 million in sales versus 146. Nonetheless, it's traded on the upside out here. Let's go take a look at it. Well, this really has struggled. This thing made a high all the way back in August of 2014 in the 110 level. It's trading at $64 right now. Nonetheless, it's got a bid. Looks like this thing has changed its trend here. It's taken out a B point. Excuse me, that B point was from the trading session of February 12th. That had 195,000 shares. You've done 196 as we speak right now. Looks like this probably heads up into about the price point from November 3rd in the 76-ish type area. That's ticker symbol is REX, Rex American Resources out there. Biogen, that's the big loser. Regeneron Pharmaceuticals to the downside. Esperion Therapeutics also to the downside out here. Again, a quick peek in at BIIB. That thing is pulling back and completing the fulfillment of filling that gap out here that was created on its breakout on March the 20th. We'll see if, in fact, that gap can hold. Level of support number 2 is 431.33. Volume on the pullback here this morning is light, 1.2 million shares, in essence, going against 10 million shares out there. If, in fact, you see the BIIB close above 439.90, and right now you're trading at 438.07, then all it's done is come back to a level of support. So, folks, stay tuned. Have a wonderful Wednesday. Our man Basil Chapman will be up next, and we got Larry Pesavento, and we'll talk to you soon. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.